Hello and welcome to another update video about Solana. Solana is consolidating at the moment here, looking at the microstructure. So let's talk about the overall scenarios that we're dealing with here. Two scenarios I'm observing mainly on the smaller time frame. The first one is the bullish one, which indicates that here a fourth wave bottomed on the 23rd of January. And we've had a series of 1-2 setups, and I've warned already today that I don't really believe it. Yeah, I don't really believe it. It seems a little bit overly bullish. Yeah, and without a real breakout, there is a risk of breaking down, and I'm going to talk about that now. So obviously in this scenario, in the yellow one, the fourth wave bottomed. We've seen this wave 1, we've seen this wave 2, and we should now be in a third wave. That third wave ideally takes us into the region around $134 to $140. So it would be a third wave, then a fourth and a fifth. The problem is that movement we've seen here is not clearly indicative of a third wave rally. It's not clearly indicative of a third wave rally. It's not aggressive enough, okay? So it's not aggressive enough, so that means we have to be a little bit on the side of caution. Okay, so it just means that we haven't got the follow through that we should ideally get if this was a third wave rally. That's one scenario, okay, where we should see really this 5-wave move up in an impulse. But as I said, we don't really see that impulsive follow through. That means we might see a change in wave count. Now, very important to realize that at the moment nothing has been invalidated, but obviously I'm observing the structures on a daily basis to be able to give you warnings when I see things potentially changing. Nothing has changed yet. Yeah, nothing has changed yet. And I usually prefer to just go with the trend as long as it's running. But I think you should know that I think the potential is high that we see a change in wave count here, or at least the microstructure. What exactly it's going to be is a bit difficult to determine right now. We are going to explore some structures in this video. But first of all, so this is the bullish base case, okay? And then there's the other scenario in which the wave 4 is still unfolding, and we would be looking at a larger A, B, C structure. Now, this scenario means that we dip back into the orange support area. And all the, 4 setups I've presented you recently did lead to profitable trades if you use them. And it might mean that based on this scenario, which gets, in my opinion, more and more likely, you might want to choose to move up your stop losses accordingly. Yeah, just think about risk management. That's all I can say. I cannot tell you to sell. I cannot tell you to, to do specific things, because that's very much personal and depends on your own risk profile. But this scenario is still very much relevant. Okay, A wave down, B wave up, C wave down. I usually, as I said, prefer to just go with the trend as long as possible, but I have to highlight this potential. It's only potential at the moment, and we always want to focus on what we see, but you have to have that short-term bearish scenario for risk management purposes. And it's nothing new. We talked about it before. A wave, B wave, C wave, no change, all right? No change to what we highlighted before. Why do I highlight it specifically again? I do it because I see this choppiness and overlapping price action develop, and that is not indicative of a third wave rally. Now let's go here to the detailed wave count. In the very bullish aggressive structure, we had a 1-2, a 1-2, a 1-2, and another, 3 1-2 setups. Yeah, we could now be in a third wave. All right, but main reason for the warning is that the third wave here should reach minimally $124, better $125.87, but the subwaves don't really align. Yeah, they don't really align. For example, this third wave of a third wave was a little bit too short. It seems like it's running out of momentum, and they are obviously the indicators I'm looking at. Now, that being said, the move down at the moment looks corrective, which means at the moment I'm still watching for higher prices, and it's just that it's a little bit too short. I see, let's say I see a lack of confluence, right? I see a lack of confluence. Ideally, it would, or maybe it's getting an extended fifth wave. We'll see. I just mean, I just want to say that this is not clearly impulsive to the upside. And also, it's always a warning when we have 3-1-2 setups and we have a lack of a breakout. So maybe it's still going to happen. Nothing's invalidated. I can tell you that this structure, this particular microstructure, will be invalidated below $108.40 and would then require a reinterpretation of the chart. That would require a reinterpretation. No, actually, it's already going to be invalidated with a break below this microwave 2 low. So $110.80. Yeah. So if that level breaks, we have to deal here with maybe a change in structure. It will already be a warning that something is happening and changing if we see a break below. So basically, if wave 1 cuts into the wave 1 price range there, between, so that's below 113.80. So I think it's worth summarizing that a break below 113.80 will mean that at least the impulsive assumption is not going to play out. And then the two levels that I mentioned to you before. And when those levels break, we have to reinterpret the chart. How exactly I'm going to do that, it's a bit too early to say. I will update you in the next video then, or will obviously post it on Discord and Telegram for gold members. But it will depend on the structure and how these support levels break. It could very well be then that this B wave has topped, but there are likely going to be other bullish structures along the way that we can explore, because don't forget that the idea is we're moving in wave 5 on the larger degree. So if this is a wave 5, it opens the door for a diagonal structure. All right. So that means, yeah, I mean, this could be a 1-2 setup, but then maybe we are now in a third wave of a diagonal, should get a 4 and a 5. But the third wave of the diagonal is an A, B, C structure, so we might see one more larger dip before it goes higher. This is not really predictable. We just have to adopt that wait and see approach. And I can only highlight to you that I see the first signals that we might not see the impulsive follow through, but in fact it might morph into a diagonal, especially possible given that we are in a larger fifth wave. All right. Yeah. So I just can highlight only that, maybe don't stick too much to the impulsive expectation. That doesn't mean it's bearish. It just means, we might see a few, morphing, and it emphasizes best practices of regular profit taking, risk management, and so on. But it's also no surprise that we see a little bit of resistance there, because remember what I highlighted to you, that here around $117, we probably see a little bit of resistance, and above that level, the $125 mark comes into focus. I would still like to see the price get to 125. In this move up, okay? And I keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.